I'm delighted to welcome you to our LPG sector panel. And we have with us another group of distinguished panelists. I would like to thank Ben Nolan from Stifel for moderating it. And I would like to welcome Charles Maltby from EPICME, Ben Martin from Avance Gas, Jens Ismar from EXMAR, and John Lycouris from Dorian LPG. So Ben, the floor is yours. Again, thank you very much. I'm really, every time that I put this panel together, these panels together, I'm awed by the fact that modern technology gives us the opportunity to log in from so many different parts of the world as we are doing now and address a global audience about a global business. So Ben, the floor is yours and thank you very much.
All right, great. Thank you, Nicholas. And it's good to be doing this exact same panel a year later from when we did it a year ago. So I'm appreciative of you letting me do it again. I guess I didn't do too badly last time, or you ran out of other people to do it. But nonetheless, this has been, obviously, the last 12 months has been tremendously eventful in every aspect of life. But one of those, as it relates to the LPG shipping business, we've seen decoupling of the asset types. We've seen wild swings in especially lately in some of the freight rates. And I thought we would start out by just doing a little bit of a level setting. We have sort of three different ship types represented: the large VLGCs, the mid-sized class, and then all the way down to the smaller pressurized ships. So I thought, because they have traded generally differently, and it's been a wild year for all of them, we would go through quickly and just sort of have a quick explanation of what is going on, what is the underlying demand dynamics that's being reflected in the freight rates at the moment. We'll start with the top, the VLGCs, and just again, we have two sort of VLGC representatives here, both Dorian and Avance. Maybe John, we'll start with you if we could, and just what's the quick 2-minute rundown of what has been going on with VLGCs and where do we stand at the moment? Yeah, I think you're on mute.
Thank you, Ben. We saw a very good second half of 2020, and it was mainly on the back of China's recovery. China reinflated and reignited their economy after their COVID experience, and that recovery was a very strong effort on their part economically. And it really, I think, touched many sectors of the shipping industry, including LPG, significantly. And as a result, we saw a big amount of activity, which caused a kind of a shortage of shipping temporarily in the second half of 2020, and rates to skyrocket into levels that we had not seen for quite a few years. As a result of that increased activity, what can you expect? Very quickly, something happened, which is these typical one-off factors that caused the markets to come off in the beginning of 2021, because there was some return back to normality. There were no more extraordinary conditions in Asia. The price of propane went up very, very high, and therefore there was less demand for propane. And we saw the rates kind of come off very significantly in the beginning of 2021. So we are almost at operating levels or even below. It's depending on what ship you have and if you have a scrubber or not. And we expect that the market is going to come back and recover from these one-off factors that we have seen in the first quarter and production and the logistics of LPG will return back to normality. So an improvement in the markets we expect in the second half of the second quarter, of 2021.
Okay, great. And Ben, Martin from Avance, you guys are sort of playing the same space. Any other color that you would add to that, or that you think it would be helpful?
No, I mean, to be honest, I agree with what John is saying. You know, our view is that the fundamentals for LPG remain pretty positive for this year. I think we just hit a perfect storm of, you know, exceptionally high freight rates. Once every 10-year cold snaps in the US, which pushed you know, Bellevue prices very, very high. And then, you know, Far Eastern holidays, which kind of stilted the buying demand. So, you know, I think there was just a concertina effect of everything catching up all at the same time. And, you know, if we look for the, you know, the demand moving forward through 2021, you know, we expect to see, you know, China continue to buy with their new PDH plants coming on, which is, I think, sort of 2.5 million tons a year of additional, you know, consumption. We would expect India and Indonesia to continue buying as well. So that sort of demand story in Asia is pretty positive in our view. You know, we think that, generally speaking, the propane prices will correct down in the next sort of week or weeks. And with that, given that freight has done all the heavy lifting to allow an arb to open up, we should start seeing cargoes moving, and then, you know, freight returning to a more normalized level.
Okay. Now, well, before I move over to you, Jens, I did want to say for those that are attending, if you do have any questions, I'm going to try to make sure that there's plenty of time to be able to work those in. So please feel free to submit them. It hopefully won't be wasted time. But now, moving over to you, Jens, and the mid-sized vessels, and appreciating that you guys do a little bit more than that, but that's sort of the core focus, I think, as it relates to your LPG business. It's a kind of a different market, right? You're doing a whole lot more ammonia, for instance, and maybe not quite the same exact trade as the VLGCs are doing. You know, any other color that might be specific to your business that is helpful to sort of understand where we are in the market?
It's as you rightfully say, we're primarily in a very different market, the mid-sized market. Although we'll have 3 VLGCs, but all these ships are traded much more conservatively and against the charter. But and add to my 2 previous panelists, you know, what is important is that the production in the US is still very strong, and it should and that should underpin the market for the rest of this year, or from the second quarter, late second quarter. And the same with if you have an increased oil production in the Middle East, that should also give us a boost. But the mid-size market is obviously very, very different. It's different because it's a different contractual portfolio. We have a much more long-term cover, or we have a rolling cover of renewable contracts. So it's a much more a time charter business, and hence, and this goes back historically, it's a much more stable market where we, you know, a more regional trade. So you know, this year we have a very high coverage. So you know, we're not hit by the same volatility, and the rates are still at a very acceptable level for also for renewals we do. And then, and as you said, you know, one third of our business is ammonia, so that is a different business, and of course that the ammonia part of the business could be interesting for us, being experts in ammonia when you look at alternative fuels and so on going forward. Okay, and Charles, you guys are sort of the smallest end of the spectrum of ships here. In the pressurized business, again, a very, very different trade, same commodities largely speaking, but a very different trade, and you didn't see this huge spike that was reflected in the VLGCs. Maybe can you talk through what's going on in the smaller pressurized and maybe to some extent semi-refrigerated vessels, to the extent that there's some overlap there as well?
Yeah, thanks very much, Ben. Thank you, everyone. Yes, the trade on the smaller ships is very different. So if we look at the macro sort of picture, I would say that global LPG demand last year was pretty COVID-proof on a global basis, maybe a 2% reduction in the year on global demand, which is very modest compared to, say, the reduction in demand for crude oil or something like that, which is maybe down 10% in total. And that meant, of course, there was plenty of demand for the underlying commodity and supply of the commodity. And where we're involved on the smaller ships is in the regional markets, the last mile delivery, and primarily for residential use, for heating and cooking. And COVID, broadly speaking, led to pretty robust residential demand for LPG. People stayed at home, people needed the gas. So we saw an underlying fairly stable picture throughout the whole course of the year, maybe slightly off, but only a smidge. And that meant that we were, to an extent, COVID proof. So our rates stayed fairly stable throughout the year, at profitable levels, but at very stable levels. And we finished the year earning maybe just around about $10,000 a day. The underlying demand from the big countries that these guys have mentioned, China, India, Korea, Indonesia, all grew, as it did in some of the smaller markets for residential LPG as well. Where we saw a little bit of reduction was maybe on the auto gas demand, which we sometimes supply into, and into some of the petrochemical trades as the year went on. Towards the end of the year, as the price of LPG propane went up, it reduced the petrochemical trades. So, and just to clarify that, about 75% of what we carry is LPG and 25% petrochemicals. And that split changes. If you go into the semi-refs, it sort of moves across to almost being 25% LPG, 75% petrochemicals. So it depends on the type of ship you have, on the smaller ship size. But all the same, the rates have been fairly stable. 2021, we're seeing a recovery in LPG supply and demand as the global economies recover, and a pickup in petrochemical demand. So we're thinking that 2021 should lead to gradually firming rate levels.
Perfect. So now move to, the inevitable elephant in the room or talking point here that always, either it's a positive or a negative, supply and incremental supply growth. I'd say LPG is somewhere in the middle. What the order book is 13-14% of the existing fleet. So it's not nothing, or it's not maybe as depressed as it is in other areas, but nor is it as high as something like LNG. I'm curious, sort of, and again, that's mostly on the VLGC side. I think there are some mid-sized vessels ordered, not a whole lot on the smaller side. But what is giving people optimism? The incremental guys, and maybe we'll start with you, Ben. You guys have a handful of, I think, 4 VLGCs on order. What is from a demand perspective, what's the motivation? Why are we out here ordering incremental ships? Returns are going to be good, but what gives you that confidence?
So from us, it's a multitude of things. I mean, we think that LPG freight needs to get greener, and these ships are a significant step in that direction. With the ability to burn LPG and run a shaft generator, means we can significantly reduce the CO2 emissions versus a traditional ship, or even a conversion ship. So that's quite a compelling argument for us. And then, sort of economically speaking, these ships are vastly more efficient than the latest generation of non-dual fuel. And then on top of that as well, we have a higher lifting capacity. So in theory, you've got the ability to carry more freight or to charge more freight. And then you have the ability to choose between burning LPG or VLSFO or gas oil. So there's a lot of sort of economic positives, I think, for these vessels, and then also, as I said, the green angle for it. In terms of why we do it, we feel that we need to stay relevant, and we need to offer our shareholders something to look forward to for the future. And these vessels, we think, will offer a real bright point for Avance Gas. I think that it's difficult to sort of say why other people aren't doing it. I mean, everyone has their own reasons, but if you look at probably the majority of people who have ordered ships are end users who are or rather they're owners who are backed by end users. So most of the ships are going on to time charter. And I guess what that shows is that the end users have confidence in the pricing of LPG in order for it to be competitive. So yeah, I guess we're kind of directionally aligned with, with those guys in the, in the long run.
I'm going to play devil's advocate with you here for a second, if I could, and maybe, well, I'll let you answer because it's directed at you, but then we can have maybe other people chime in here. Ordering ships on the basis of sort of relative improvements in efficiencies, or being relatively better than an older ship is fine, but it's hard to eat relative returns if the whole market is soft, right? Mm-hmm. Just being better than the next best person doesn't necessarily mean that your returns are going to be good. There has to be some level of confidence that, either it's going to be good for everyone or it's not going to be good for anyone.
Yeah, I would agree with that. I mean, I guess you have to make your own investment decisions, and obviously we've made we've made a cash flow analysis of where we see the market going, and it justifies the investment for us. But in terms of, yes, you obviously you can't, if the market's bad, it's bad for everyone, but it won't be as bad for us as it will be for others.
Right. And so maybe now we can open it up to the rest of you. And again, Charles, you maybe can pitch in on the smaller side. You're not dealing with people ordering quite as much as has been the case for some of the larger ships. But John or Jens, how are you guys thinking about, I mean, the prospects of ordering ships yourselves? What are the positives and negatives, and where do you stand on that? Is your confidence in the underlying demand for the cargoes enough to do it? How do you factor in sort of the relative advantage of, a newer, more efficient ship as opposed to, the existing fleet, and deciding whether or not to place incremental orders?
Yeah, I mean, as Ben says, ultimately we're a business, aren't we? But putting that aside, I think from the smaller ships, you can see that there's much less focus on dual fuel ordering at this point. And that's partly because the technical solutions are not as readily available yet to provide the dual fuel engines and that kind of thing. But also when we look at it, we're thinking that we've got a phase here for the next 30 years. And of course, that 30 years will pass and then there'll be another phase and so on and so on. But if you just take it at the headline level, it's 30 years till 2050. The average life of a pressurized ship is also 30 years. And our fleet today is already on average 8-9 years old. And we're going to be making a lot of gradual investment decisions over the next 2 years, 5 years, 10 years, 20 years, 30 years on our fleet anyway. And not one single one of the ships that's in our fleet today will be in our fleet in 2050. So we've got plenty of time to work through a phased adjustment of our fleet, gradually investing in more efficient, decarbonizing the emissions and so on as we go. And we know that the solutions that we're looking at today won't necessarily be the solutions that we're looking at in 2040, but we have plenty of time. But we are working with shipyards, engine makers, and tank designers like everybody else to explore what are the options we can start progressing as we go through the second half of this decade.
Yeah, and I'll leave it to maybe John or Jens here, but to that end, what we're or maybe relative to what you just said there, Charles, maybe what I'm thinking about is incremental growth. I'm not talking about replacing your older ships. If you're going to continue to remain a going concern, that you have to do that at some point. But incrementally, why would you add to the size of your business through incremental ordering, or how would you, or why wouldn't you?
But this is not a business that has a lot of solidarity. It's and owners think about their own book, obviously, and what to do, how to be positioned right. And if you look at the new ships with dual fuel, primarily on the fully rev side, because on the smaller, I don't think it makes much sense. These ships are much more efficient. And if you take into account the new EEXI rules that will probably take effect in 2023, the older ships are quite substantially, or it remains to be seen, but that's what the indications are, penalized and may have to slow steam. So, you know, it is all about having the best tools and being the most competitive. And in that regard, you need to look into buildings, you know, from time to time, some ships. Although we have no mid-sized ships on order today, but it's obviously something we are considering all the time.
Yes, I just wanted to add something. We have to deal in shipping, at least we have to deal with a progressive and incremental response to what is happening in our markets. And, you know, one of them is the supply of product and the demand for product, which is fundamentally very strong. And we expect that the second half of this year, 2021, is going to be strong because there's going to be a significant recovery in the Western economies. And as a result, there will be a very strong demand of product and production. But also, I'd like to say about the environmental profile of the fleet and of what we're looking forward to. We need to transition our fleets eventually to a better emission and environmental profile. And I think the solution is either by building new ships or adapting our ships to become more hybrid in their in what they look in the future. In hybrid, I mean, we started with scrubbers because it was a requirement as of the 1st of January 2020. We did that. Now we're looking at adding our ships either dual fuel, which is something that's being considered right now, and it's being done in 4 ships, the first 4 ships that have been just completed in dual fuel. No other engine has been built yet with dual fuel. Then you're going to have to consider batteries. You're going to have to consider fuel cells. You're going to have to consider a number of solutions to the EXI requirements of the IMO and the emissions requirements of 2030. As a result, not even those new ships are going to really perform as we would like them to by 2030, but we need to move forward the industry. And I think one of the solutions is to order a new ship and start adding hybrid solutions to it to improve it so it can be able to trade into 2030 and 2040.
Right.
But the special thing about the LPG industry is that we have a bridge solution, and it's easier for us to order ships than it is for other shipping segments because we are carrying our own fuel. And that is at least a part of the solution and a long bridge solution to decarbonize the industry. So that is, you know, maybe inducing some people to order more ships than they otherwise would because it's easier in our part of the industry.
Is that ease of logistical ease or ease of energy transition, is that a risk, do you think? Again, sort of, what if people are ordering ships simply because it's easy to do so without keeping in mind the underlying supply and demand dynamics of the vessel?
I hope they reflect more than making that easy decision for making a commitment for ordering ships, because it's obviously a substantial investment. So I hope it's a more in-depth analysis before they make that decision.
Right. So there's a few other things I want to talk on. But while we're here, let's talk a little bit about some of the dual fuel, and then maybe we'll move over to the potential for ammonia, which has a whole different direction that we can go. But Ben, you guys, the ships that you've ordered are dual fuel. You obviously are confident enough that a lot of the challenges that might be present in things like, you know, obtaining the fuel in the first place, or incremental environmental regulations, all of the other issues are not overly burdensome or taxing such that you're not willing to sort of move forward with it. Can you maybe walk through how you were thinking about, you know, the decision? Obviously, you know, you talked a little bit about the relative applications of the ships, but maybe a little bit how you're thinking about the incremental risks and why.
Sure. Well, I mean, I think Jens is completely right the way he said it. One of the benefits is that we're actually carrying this cargo. So in theory, you know, you have a built-in backstop, don't you? It's just a question of agreeing a price with the, you know, the charter of the vessel. Or if it's on time charter, then as an owner, it's not really your issue. It's for those guys to worry about. I think the other thing that's quite positive about certainly the type of ships that we've done, which are 91,000 cubics, is that we can do full round trips, you know, with enough cargo capacity to still be able to over deliver the maximum amount in the Far East and make it back to Houston. So, you know, we're not putting ourselves in a position where you might end up in a place where you can't find LPG as a fuel because you'll be back in a low port in the US, or alternatively you'll be in the Middle East. So really it's a question of, I guess, knowing where the pitfalls might be. So around your you know, your bunker contracts, your supply contracts, and working hard to, you know, to ensure that you iron those things out. I mean, our group has a bunkering business which is called TFG Marine, and so we're working with those guys to make sure we've got the access we need. And you know, there's obviously, as I said, the flip side is that you can put them out on TC, and then it's not really the owner's concern. Technologically wise, I mean, we're very comfortable with the build that is happening. We're very comfortable with the way the engines will work. We're very comfortable with the companies who are providing the equipment for us. So we don't see any issues there. I'm sure there will be, as with any new technology, some teething problems, but you know, we've got a very strong team of technical people in-house and on our technical management, you know, groups. So yeah, we're pretty comfortable with what we've done. I mean, we've invested huge amounts of money in this, so we're, you know, we are a firm backer, let's say.
Just add to this that we were, you know, a little bit the EXMAR DNA. We were the first to order dual fuel VLGCs, and these ships were ordered against the time charter to one of the oil majors or with big oil companies. So we're very confident in the dual fuel system, and very confident that it will work. And these ships will deliver this year, so they will be the first new buildings to be delivered with the dual fuel.
Putting your sort of forecasting hat on, either of you, maybe, since you both have placed orders, 5 years from now, do you think every incremental order of at least a larger LPG carrier will be do fuel like this, or do you think this is a bridge? And if it's a bridge, how long of a bridge is it, do you think?
Well, I listened to DNV GL a few weeks ago, and they said the LNG and the LPG as a bridge fuel, and it's a very long bridge. So I think it's beyond the 5-year horizon that you're mentioning.
Okay.
Because, you know, you mentioned ammonia, and ammonia might be a solution, but the first engine that could be available is in the end of 2024, which means that you know, if it is a solution, which we believe it could be, but it will take a long time before it's something that is widely used.
Yeah, and I think the engine is one thing, but the access to the fuel is another thing. And you know, ammonia or green ammonia is, I assume, kind of a pipe dream at the moment. You know, the cost for production is extraordinarily high, and you know, I don't think they really have a system of finding the renewable energy to make it a truly green product. So I think there are a lot of hurdles to get through before, you know, we talk about a further fuel source.
Yes.
Well,
and I agree with that, because I mean, but as we carry ammonia already, I mean, it could be a solution for at least as a starting point, as a niche trade or a niche business.
Well, that's really what I think. I'm sure in many of the other conversations and discussions that will be going on at this conference, green or blue ammonia, it will come up, but probably nobody is better situated to be able to speak about the possibilities of that becoming viable than this particular panel. And ultimately, I mean, for several reasons. First of all, as a fuel, but somebody's got to move the stuff around, right? And that obviously, if it does work, it has tremendous potential as a incremental demand driver for LPG vessels. we've heard from Ben, we've heard from Jens. I don't know, Charles or John, have either of the two of you sort of, do you have a view on sort of ammonia and whether you think it will be viable given your position sort of as an LPG carrier and probably closer to the end product than most of the people that would be at the conference here?
Well, as Jens has touched on, it's definitely viable for carriage, and in the past, plenty of ships have been involved in the carriage of the product in EPIC and in our future combination partner with Lycouris and Kosan. We've been involved in those trades, but at the moment, I think it's over 40% of the mid-size fleet is capable of carrying ammonia. So there's plenty of capacity to do that, but we're probably 10, 15 years away, aren't we? And that would be a new generation of ships, I think, before we get to that point. But it's ammonia is one of the solutions that we're also keeping an eye on and considering for the future, alongside dual fuel LPG. An interesting observation on dual fuel LPG, if you don't mind me dragging us back there very briefly. For the, I mean, we talked about the cargo tanks being optional bunker tanks, but are the bunker tanks also optional cargo tanks for some customers? No.
John, any thoughts on ammonia at all, or it's been covered from your perspective?
I think it's been covered. Look, the first order of business is probably a dual fuel engine that burns LPG. That engine can be in the future adapted to burn ammonia. And that's the benefit of having a dual fuel engine, that at some point in the future, if it becomes viable and economically feasible to burn ammonia in this particular engine. So it is a flexibility that these LPG engines, the dual fuel LPG engines, can and will be able to be changed relatively easily to become ammonia engines. So, but as we know, the availability of ammonia is difficult, especially green ammonia, and so we don't see that coming in the next 5 years. Okay.
All right. Well, I think we've adequately, maybe not exhausted, but at least covered the ammonia topic here. I wanted to talk about maybe some of the longer term implications from COVID. Switching gears a little bit, maybe start with you, Charles. We've seen, well, the refinery complex is one of the major contributors, especially to the smaller pressurized LPG cargoes, maybe less so than the big mega export terminals where it's straight out of the ground almost. But as we've seen refineries close, it's changing the dynamics and the logistics for a lot of things, but in particular for your business. Can you maybe talk through how that has impacted the demand for your vessels and how you think it might play out going forward?
Yeah, sure. So, I mean, for instance, if we take Europe during 2020, we obviously saw the refineries themselves slowing down their run rates in order to manage reduced demand for, say, car fuel and aviation fuel. And that led to reduced supply of refinery LPG. Which then impacted, of course, the availability of LPG to go into markets for residential use. Say, if we're looking just at Europe, into Spain or into North Africa and so on. So that led to product having to be sourced from elsewhere because the underlying demand for the product remained robust. Residential LPG demand remained solid. So we saw a sort of dislocation, a relocation of trading patterns to meet that. And there was a brief point at the sort of late summer last year where it looked like European refineries were coming back online, and then that all sort of slowed back down again, and maintenance and turnarounds and so on have been brought forward, and lots of work is being done on refineries to try and use the time up productively. But it is forecast that a lot of that production capacity will return as we go through 2021, and we'll see a return in supply of refined LPG coming out of those facilities. So things will normalize. And it is forecast that demand this year, or sorry, supply of LPG and demand for LPG will increase by over 3%, which is a solid step, that's for sure.
So in your perspective, and then maybe in anyone else's perspective, the COVID events, especially as things normalize, there won't be any lingering long-term side effects, or positive or negative. I don't know if you have a view on either of those.
I think sorry, go on, Charles.
No, after you, Jens, please.
No, I think it's the only place where it has had an effect, as Charles said, is in Europe on the smaller ships, where we really struggled this year with the few ships we have over here. But longer term, I think that will rectify, and I think on the bigger ships, on the fully rev ships, mid-size and VLGCs, it has not had a negative impact on the market.
Actually, we have seen a very strong residential commercial demand in Asia through the second half of the year, last year. So it was residential, it was commercial, and it was also petrochemical demand as a result of COVID. So we've seen some positive out of this situation.
The unofficial letter for the year 2020 is B. So it sounds like certainly we saw that. At least in the VLGCs. I wanted to turn a little bit now corporately. We've discussed a lot about the industry, and the LPG space is more consolidated than most other spaces, but there still has been incremental consolidation. Charles, you guys are involved in incremental consolidation yourselves. Longer term, this is a small market, a small market within shipping, which from a public equity perspective, at least, shipping is still not, outside of a few names, it's still not a very big business. And LPG is a tiny part of that relatively small business. How do you guys think, and this is open to anybody, how do you guys think, or are there any thoughts about sort of what's the best direction for the public companies going forward? Does there need to be consolidation there? Do they need to be bigger? Or is it just, it's a kind of a niche area, and it'll be, hot or cold, and that's just the way that it is, and it doesn't really matter how big your company is. Any thoughts?
Well, if I may say something, I think it's definitely an advantage to be bigger. But I think the main problem is the pricing we have on the listed companies in general in shipping, where, for a large part, you're priced way below NAV. And that is obviously making it a challenge to use your listing as a currency. And this is a more structured problem for shipping, and of course then, as you can question whether the value of being listed or not.
Right, we wrote about that over the weekend, incidentally, if anybody was curious. But any other thoughts? That's a very existential question or answer there. What's the even point of being listed if we can't use our listing? Has that crossed anyone else's minds on the panel here?
From a consolidation point of view, I agree with Jens. The scale, we enjoy the benefits of scale, but also we need the benefits of scale in order to plan for the next 15 and 20 years. The investments we're expected and need to make in digitalization, sustainability, decarbonization, it requires us to make big decisions. And if we want to both be able to afford to make those decisions and then to get the benefit of them as well, the scale is really useful because we're chasing after the 0.1s of the 1% now. We're chasing after those tiny percents, and the more ships you have, the greater the benefit of those tiny little percents. They all add up. So yeah, I mean that's the main driver for us in the combination we're working on with Lycouris and Kosan, is that we can see that we're going to put two great brands together. 1-on-1 is going to equal 3. And we're going to have access to 75 plus ships on the water in order to get the efficiencies and the synergies, the economies of scale, and the data that comes from those ships, and then also to have the balance sheet strength to make the right decisions for the future.
Interesting. I see, Nicholas. That must mean that we're about to get the hook here. Well, we didn't have any questions, so all of you missed your opportunities to have me ask snarky, ridiculous questions. Sorry, I may or may not have done it, but it looks like if we are out of time, I want to say, first of all, Nicholas, again, I appreciate you having me back again, and to all our panelists, I thought this was a very informative and maybe not provocative, but maybe a little provocative conversation. So I appreciate it.
Thank you.
Well, thank you to everybody. Thank you, Ben, for moderating the panel again. Thank you, Charles, John, Ben, and Jens. Thank you very much for being with us. It was another great panel. Thank you so much.
Welcome.